To the mega CNBC exclusive now. Legendary market investor Warren Buffett, he always believes in keeping it simple and staying with that mantra. He also says that one should not mix politics and investments. He also believes that the global market and Wall Street in particular is not in a bubble, and therefore it's the right time to enter the market. Let's take a listen in.
We have hiccups in the economy, and we even had a panic in 2008. And we had a war during that period. That when I started, we were losing the war, actually, in the spring of 1942. But this country always comes back and wins. And it's astounding when you think about it, what's happened in 240 years. That is less than 3 of my lifetimes. And just look at this place. I mean, there wasn't anything here 240 years ago. And civilization had gone on, for centuries and centuries and centuries with people making very little progress in their lives. And then America showed the way, and we have not lost the secret sauce.
In terms of what the message is you want to get across to people, I mean, when we're looking at markets at such high levels, as Joe was just alluding to, it has a lot of doubters and a lot of people saying, wait, it's too late for me to get in. I've missed it. We're past Dow 20,000. Yeah. Now I have to wait for the pullback. What would you say to someone like that?
Well, I would say they don't know, and I don't know. And if there's a game that's very good to be in for the rest of your life, the idea to stay out of it because you think you know when to enter it is a terrible mistake. I don't know anybody that can time markets over the years. A lot of people thought they can. But if you were buying a farm and you decided that farms were going to be worth more money 10 or 20 or 30 years from now and that would be a productive asset, you'd go out and buy it unless it was just at some absurd price. And the best thing with stocks actually is to buy them consistently over time. You want to spread the risk as far as the specific companies you're in by owning a diversified group, and you diversify over time by buying this month, next month, the year after, the year after, the year after. But you're making a terrible mistake if you stay out of a game that you think is going to be very good over time because you think you can pick a better time to enter it.
Although you have had times where you thought stocks were incredibly cheap, like in 2008, 2009, when you talked about that, even on our program. You've thought that there were times that stocks were greatly overvalued, where you've said, forget it, don't do it. Are we near an inflection point right now, as best as you can tell?
Well, I've been talking this way for quite a while, ever since the fall of 2008. I was a little early on that, actually. But I don't think you can time it, and we are not in a bubble territory or anything of the sort. Now, if interest rates were 7 or 8%, then these prices would look exceptionally high. But you have to measure, you measure everything against interest rates, basically. And interest rates act like gravity on valuation. So when interest rates were 15% in 1982, they pulled down the value of any asset. So what's the sense of buying a farm on a 4% yield basis if you can get 15% in governments? But measured against interest rates, stocks actually are on the cheap side compared to historic valuations. But the risk always is that interest rates go up a lot, and that brings stocks down. But I would say this, if the 10-year stays at 230 and it would stay there for 10 years, you would regret very much not having bought stocks now.
Charlie Munger made some comments also at the Daily Journal annual meeting just a few weeks ago, Warren, and he said that, look, he's mellowed on Donald Trump because he had some things that were not so nice to say about him before. He also said, look, not everything he's doing I disagree with. He is in favor of some of the things he said about Social Security and some of the other moves he's made. Have you mellowed as well?
Well, I would say that I would agree with Charlie on that in terms of the entitlements and Social Security, and I certainly, you can't help but feel if you're in business, everybody, there are a lot of regulations that I think probably have gone too far. So I will judge President Trump after 4 years based, number one, on how safe the country has been kept. I mean, that is the number one job of the chief executive of the United States, and that's not an easy job. And I'm not thinking of random killings or anything like that. I'm thinking of weapons of mass destruction. I mean, that's my number one worry, and that's the number one test I have. Secondly, I'll judge them to a degree, although they have less control over this. Well, they need a little luck on weapons of mass destruction too, but how the economy does overall. And then third, I'll judge them on how, if the economy does well, which I expect it to do, how wide the participation in that in a better economy extends. And those are the three primary tests I would have applied to Hillary Clinton or to Donald Trump.
All right, those are some